Hi, this is Jack Ma with Century 21 Masters. Welcome to this video. Typically, during the first 3 months of the year, the inventory does not increase much and the buyer demand usually increase slowly, and that's what set up the spring to be the strongest quarter of the year for housing market. This year, things are a little bit different this year. With the hunkering down effect fading, we're seeing about 22% more new listings placed on the market than last year, and 43% more than 2023. This has caused the active inventory on the market to grow noticeably. This year, the inventory level at the start of spring is 56% higher than last year and 9% higher than pre-COVID status. And in terms of demand, the demand has seen some fluctuations. At the start of the spring quarter, the demand on the market is 1% lower than last year and 32% less than pre-COVID. So what we're seeing is that instead of seeing low inventory and upward trending demands at beginning of spring, we are actually seeing an upward trending inventory and pretty stagnant demand. And with that, buyers have more choices. So the expected marketing time, and that is defined by the time a listing is placed on the market until it goes through escrow and actual close of escrow, had reached to a 94 days, which is the slowest pace since 2012. Basically, what we're seeing, it's gonna be a buyer's spring market. No longer are the days when homes are selling within a week. 58% of the homes have been on the market for more than a month. And 1/3, or actually 35% of them, are on the market for more than 2 months. And what's even more shocking is almost 30% of all active listings have reduced their asking price at least once. So some are even requiring multiple price reduction to get it sold. So if the inventory continue to rise at this pace, similar to last year, we will see the highest inventory level since 2012 by end of spring. And if the demands rise by 6% just like last year, it will still place us to the level of the last couple of years. So pretty muted demand. And so we can basically expect the marketing time continue to trend up. Buckle up. We're seeing our first buyer's market in a very, very long time. Now, what does that mean for a seller on the market or buyers that are on the market? For sellers, don't get discouraged. Even though it's slowing down, even though buyers are having more choices, buyers are looking for move-in ready homes, and since they have choices and more are coming, so they want to make sure they buy the best that money can afford. So make sure your property shows well and any major repair are taken care of. And if financially allowed, consider bring the condition of the property to current market standard. That means renovation. And there are vendors that can actually front you the remodeling cost with a fee, and then they're going to share the upside with you. And for buyers on the market, it does appear that interest rate will trend down slowly this year as we headed into more economic uncertainty. It is now predicted 50% chance we'll head into a recession. So for every 1% drop in interest rate, that means buyers' purchase power almost goes up about 10%. So as you can imagine, if that happens, you're going to see more competition, more bidding war, and then driving price back up again. So take advantage of the market right now with the muted demand and increased supply, which means it gives you a stronger negotiation power. Get in the house you want and then just refinance later. All right, that's it for you today. If you have any question, give me a call, send me a message. If you like the content you're watching, subscribe, like, and I'll talk to you soon. Bye-bye.